Richard J. Dennis, dubbed the Prince of the Pit, emerged as a prominent figure in the commodities trading arena after borrowing a modest sum of $1,600 in the early 1970s. Astoundingly, within a span of about 6 years, he reportedly amassed a staggering $350 million through his trading endeavors, showcasing his exceptional acumen in the financial markets. Despite his remarkable success, Dennis faced a significant setback when a futures trading fund he managed suffered substantial losses during the stock market crash of 1987. This downturn prompted him to step back from trading activities for several years, reflecting on his strategies and reassessing his approach to investment. Beyond his prowess in finance, Dennis has been actively involved in political causes, aligning himself with both democratic and libertarian movements. Notably, he has been a vocal advocate against drug prohibition, leveraging his influence and resources to champion policy reforms aimed at addressing social issues. Richard Dennis's journey into the world of trading began at the young age of 17 when he became an order runner on the trading floor of the Chicago Mercantile Exchange. This early exposure to the fast-paced environment of trading laid the foundation for his future success. Undeterred by age restrictions, Dennis found innovative ways to enter the trading world. He began trading for his own account at the Mid-America Commodity Exchange, leveraging his resourcefulness to circumvent age requirements and maximize his opportunities. Despite his early success in trading, Dennis recognized the value of education and pursued a bachelor's degree in philosophy from DePaul University. Although he initially embarked on graduate studies at Tulane University, his passion for trading ultimately led him back to the trading floor. Armed with just $1,600 borrowed from his family, Dennis embarked on his trading journey. Through disciplined trading and astute decision-making, he turned this modest sum into substantial capital, eventually reaching millionaire status by the age of 26. Dennis's breakthrough came in 1974 when he made a profit of $500,000 trading soybeans, solidifying his reputation as a trading prodigy. By the end of that year, he had amassed considerable wealth and established himself as a formidable force in the trading world. Richard Dennis's remarkable rise from a young order runner to a millionaire trader exemplifies the power of determination, talent, and ingenuity. His story serves as an inspiration to aspiring traders, highlighting the transformative potential of seizing opportunities and navigating challenges in pursuit of financial success. Richard Dennis capitalized on the volatile and inflationary markets of the 1970s, leveraging his keen insight to profit from successive new weekly and monthly highs. Amidst crop failures and geopolitical events like the Great Russian Grain Robbery of 1972, Dennis adeptly navigated these turbulent times to secure substantial gains. While many floor traders focused on quick trades and scalping throughout the trading day, Dennis adopted a different approach. He held positions for longer durations, strategically riding out short-term fluctuations and capitalizing on sustained price trends over the intermediate term. Dennis's trading strategy often involved pyramiding his positions, a technique that allowed him to amplify his profits during favorable market conditions. By building upon his initial positions as trends strengthened, he maximized his potential returns and solidified his success in the trading world. In pursuit of broader market opportunities, Dennis invested in a full membership at the prestigious Chicago Board of Trade in the late 1970s. This strategic move enabled him to access a wider range of markets and diversify his trading portfolio, further enhancing his ability to capitalize on emerging trends. Richard Dennis's mastery of trend following during the 1970s cemented his reputation as a trading legend. His ability to navigate volatile markets, embrace long-term positioning, and leverage pyramiding techniques set him apart as a pioneering figure in the trading community, leaving a lasting legacy that continues to inspire traders to this day. Richard Dennis challenged conventional wisdom by asserting that successful trading could be taught. To settle this debate, he devised an ambitious experiment with William Eckhart, recruiting and training a group of individuals known as the Turtles. Dennis conducted a rigorous training program for the Turtles, spanning just 2 weeks, where they were instructed in a simple yet powerful trend-following system. They learned to trade a variety of markets, including commodities, currencies, and bonds, with a focus on buying during price uptrends and selling during downtrends. The turtles were imparted with key principles, including the importance of cutting position size during losing periods and aggressively pyramiding their positions during favorable market conditions. Despite exposing only a portion of their capital at any given time, they were taught to maximize their potential gains during strong market moves. Dennis's trading system acknowledged the cyclical nature of markets, recognizing that periods of range-bound trading could result in losses, while large market trends offered significant profit opportunities. The turtles were trained to adapt their strategies accordingly, capitalizing on market dynamics to achieve success. The turtle experiment left a lasting legacy in the trading world, demonstrating the effectiveness of systematic trend-following strategies. The success of the turtles underscored Dennis's belief in the teachability of trading skills and continues to inspire aspiring traders to embrace disciplined approaches to the markets. Following a 2-week training period in January 1984, Richard Dennis provided each of the turtles with a trading account and instructed them to implement the systems they had been taught. During this trial period, they were limited to trading a maximum of 12 contracts per market. At the conclusion of the trial period, Dennis allocated substantial amounts of his own capital, ranging from $250,000 to $2 million, to those turtles who had demonstrated successful trading performance during the 1-month trial. This marked the beginning of their professional trading careers. Over the course of 5 years, the turtles collectively generated an astounding aggregate profit of $175 million. This impressive outcome underscored the effectiveness of the trading system imparted by Dennis and validated his belief in the teachability of successful trading strategies. While the exact system taught to the turtles has been documented in books and subjected to backtesting, showing mixed performance in subsequent years, many turtles went on to establish successful careers as commodity trading managers. Individuals such as Jerry Parker, Liz Cheval, and Paul Rabar continued to apply similar techniques, adapted to evolving market conditions, achieving notable success in their respective endeavors. The turtles experiment left a lasting impact on the trading industry, demonstrating the potential for disciplined, systematic approaches to yield significant profits in financial markets. Despite fluctuations in performance and changes in market dynamics, the principles instilled by Richard Dennis continue to inform and inspire traders seeking to navigate the complexities of the global markets. Richard Dennis initially managed pools of capital for others in the financial markets, but withdrew from such activities in the spring of 1988, following heavy losses incurred by his clients. The Black Monday stock market crash of 1987 reportedly resulted in a personal loss of $10 million for Dennis, with a total of $50 million lost by his clients in 1987, 1988. In 1990, Dennis's firm settled investor complaints related to his failure to adhere to his own trading rules, paying over $2.5 million without admitting or denying any wrongdoing. He also managed funds during the mid and late 1990s, but closed these operations after experiencing losses in the summer of 2000. Currently, Dennis serves as the president of the Dennis Trading Group, Inc., and holds the position of vice chairman at C&D Commodities. Additionally, he has been actively involved in various philanthropic endeavors and advocacy groups, including serving as the former chairman of the advisory board of the Drug Policy Alliance and as a member of the board of directors of the Cato Institute and the board of trustees of the Reason Foundation. Despite challenges and setbacks in his trading career, Richard Dennis remains an influential figure in the financial industry and continues to contribute to various causes through his philanthropic efforts and advisory roles. His experiences and insights serve as valuable lessons for traders and investors navigating the complexities of the global financial markets. Richard Dennis faced significant challenges in managing client funds, especially during periods of political ambition and increased responsibility. As he moved beyond trading his own money and began managing funds for others, he encountered the added pressure and workload of preserving their investments. Despite his successes, Dennis experienced severe downturns in his trading performance, particularly highlighted by the turbulent year of 1983. After a promising start with a significant rise in January, his clients' accounts suffered a sharp decline of 33% in February and March. This volatility led influential investors like George Soros to withdraw their investments, exacerbating the situation. Dennis's aggressive trading style, which had previously yielded significant returns, proved challenging for clients to stomach during periods of market turbulence. While clients initially sought to emulate his success, they struggled to endure the inevitable fluctuations in value. Dennis learned firsthand about the irrational expectations of investors and the difficulty of managing their psychological responses to market volatility. Despite facing criticism and setbacks, Richard Dennis adapted his approach to managing client funds, rebating management fees to losing accounts, and acknowledging the limitations of trading client money as aggressively as his own. These experiences underscored the importance of aligning investor expectations with the realities of market dynamics, ultimately shaping Dennis's evolution as a professional trader and fund manager. Throughout his career, Richard Dennis demonstrated an extraordinary ability to generate substantial profits from trading. His financial achievements soared, with notable earnings of $80 million in 1986 and a staggering $147 million in 2007, cementing his status as a titan of Wall Street alongside luminaries like George Soros. Despite his remarkable successes, Dennis encountered significant challenges along the way. The infamous Black Monday saw him lose $10 million, a testament to the unpredictable nature of financial markets. Yet it was his resilience and determination that allowed him to weather such storms and continue his pursuit of profit. Dennis's approach to trading was characterized by innovation and adaptability. He eschewed conventional wisdom, instead opting for a diversified portfolio of smaller investments, a strategy that proved immensely lucrative over time. His ability to identify and capitalize on market opportunities set him apart as a true master of his craft. While Richard Dennis may no longer be actively involved on the trading floor, his legacy as a pioneer in the financial world endures. His remarkable journey serves as an inspiration to aspiring traders, showcasing the rewards that await those who dare to challenge the status quo and embrace innovation in pursuit of financial success.